curating a very expert panel for you today. And I'm co-founder and chief executive of a company called Oasis Loss Modeling Framework, which is a company that was formed 5 years ago to try and bring a change in how we look at catastrophe modeling, understanding of pricing risk, and a few other services. And I'm going to try and help today get some interesting debate and some good questions. So a couple of things. First of all, if you haven't yet worked it out, I think you've got it on these screens here around you. Well, actually, first of all, if you're sitting behind us, they've all gone now. That's good. That's not a good place to be because we're going to face this way. Secondly, we're going to hopefully have a really good discussion here in a debate, and we'd love to involve you in that. So if you have any questions, you can either go into the app, and you can go into the app. It says up here, but you go into the session, and there's a thing that says Ask a Question. So you can do it that way. It'll appear here, and I'll hopefully remember to look at it and refresh it every now and then. But you can actually just stick your hand up. And I've got a microphone too, so we can give that out. So please don't feel like, please do ask questions. It'll make it better for the panel, and hopefully make it better for you as well. I just want a couple of minutes on setting the scene, and then I'm going to introduce you to the panel and the speakers. I think this morning we've heard enough about the challenges we face in this industry and what our roles really are. And what we're going to try and look at today is how catastrophe modeling and product development around that is going to be able to deal with a world where digitization and innovation are perhaps testing our industry more than we've had before. And I think if we look at particularly how catastrophe modeling has played a role there, for 30 years we've had some great assistance. In fact, you might say that catastrophe modeling, was one of the first benefits to appear in our industry from the sort of computer age back in the sort of late 70s and early 80s. And, it's been moving sort of steadily forward. And I think one of the questions that I would have is, and we'll get to a bit later on, is the solutions and the products we have today fit for the future? And are they going to meet the changing needs of the millennial generation? Are we seeing new innovative platforms that can be satisfied by what we're doing today and how we're doing today? And when I go around the world, and Oasis is backed by about 40 insurance and reinsurance companies and brokers, and when I go around the world talking to people, and I probably have on average 2 or 3 conversations a day with people, there are certain themes that come up. So one of them inevitably is the costs. And there are significant costs in the businesses that most of you are running around the world that involve looking at the risks and risk assessment on mostly property-related business, but obviously the cat modeling companies also look at things like cyber and marine and some other areas as well. So it's the cost of the staff needed to run these models. In some cases, it's the cost of the specialized staff needed to assess and validate these models. There's huge additional costs that have appeared in the last few years in satisfying the regulatory requirements for these models. And so the cost is possibly the thing that's certainly the issue that crops up when I talk to people at the board level for insurance, reinsurance companies. I think another big question is around understanding how really these models work and the level of transparency and how one can help validate these sort of products. And I think there is a challenge in that there clearly needs to be IP for these companies to make sure that they don't give away secrets that means that other people can just replicate their products and they lose the value of their companies. That's obviously not desirable. But on the other hand, we have to balance that with the fact that you can't use models without having an understanding about the parameters and the assumptions in those models and probably the sensitivity around the assumptions that are being made. So how do we balance that in a world that's increasingly asking us to make decisions on risk? And I think that's a sort of challenge. It's not helped by the fact that I think humans, generally speaking, don't like uncertainty. We often will do an awful lot to try and avoid too much uncertainty. And there clearly is uncertainty in looking at the tail of natural catastrophe risk. And if you talk to academics about what their knowledge is of a 1 in 200 year event, the honest ones will almost certainly say, we don't really know. Yet our regulators are asking us to try and understand that, and the people producing products in this space are trying to help us articulate the answer to that sort of question. And then we got just this issue of technology and how that plays going forward. With some debate earlier this morning about sort of legacy systems versus non-legacy systems. And, you know, are we really looking at how we consume this information in the right way? And I think really importantly, also, who else needs to understand this information? I think it's very hard to sell into a customer base that is ignorant of the risks that they're seeking insurance or reinsurance for. So I think I'm making the assumption that we want to have an informed customer base about these risks. And do we have that information readily available for them in a format that they understand? And to what extent do we need to have some standards in this space to facilitate that? And what's the role of interoperability play in making some of this information more broadly available? So those are some of the topics that I talk to people around the world on. And we have on the panel today 3 people who are expertly in a position to try and help answer those questions, all of whom have got considerable experience in this space. And we've got at the end Ernst Rauch, who is Head of Corporate Climate Centre for Munich Re. Next to that, we've got Robert Muir-Wood, and Robert is Chief Research Officer at RMS, and many of you will know that RMS is the largest company providing catastrophe risk models around the world. And we have Martin Bertogg next to me, who is Head of Swiss Re's Cat Perils team. So that's your panel. And just to start with, I'm going to ask them to just sort of 2 or 3 minutes on what they do and how they do it, on the assumption that some of you in the audience won't have detailed knowledge of what that means on a day-to-day basis. So hopefully when they answer questions, that'll put some context to where they're sort of coming from. So Ernst, do you want to perhaps just give some brief thoughts first?
Thank you, Dickie, and good morning, everybody. I'm currently heading Munich Re's Corporate Climate Center, which is best described as a think tank, a research unit, and a product development unit in the same time. So it's more on the strategic level. I'm coming from catastrophe modeling since I joined Munich Re in 1988. Back then, my colleagues and I we shared the second PC, personal computer within Munich Re. The first one, of course, was with the CEO. And we started with the development of earthquake catastrophe models. And I was engaged for a number of years, from earthquake risk modeling to windstorm modeling, and then now on to a level where we analyze risks which are more on a long-term scale relevant to us. So that's on climate change, and that's part of the modeling perspective, but not limited to it.
Okay, so my name is Robert Muir-Wood. I'm the Chief Research Officer at Risk Management Solutions, which is a risk modeling company which grew out of the crisis, which we should remember, the crisis that global insurance and reinsurance had between about 1987 and 1994, when it was hit by a succession of disasters, and there was a real concern about not being able to manage this risk effectively. So modeling emerged to solve a problem at the time, and has been extremely influential and successful since that time in actually helping constrain how business is priced, how portfolios are managed. And we shouldn't forget that, because the insurance sector, or the property insurance sector, went through the financial crisis of the 2007-2008 period because it had the understanding critical to the function of insurance of actually how to manage and measure catastrophe risk. So catastrophe modeling has expanded out of its original focus on hurricane and earthquake into flood, into severe convective storms, and into other classes of risk like pandemic risk modeling, like cyber risk modeling. There's a parallel session here, I know, this morning on cyber. I mean, the huge focus is going on right now at the modeling of cyber risk. Personally, I have a mission to try and expand or extend the role of modeling into new areas of risk, and in particular, new areas of risk even beyond the insurance sector itself. So last week, for example, I was at a meeting organized by the United Nations in Cancun, Mexico, which was the big platform meeting with 6,000 attendees on the subject of reducing disaster risk. These same models, the same catastrophe models, are also very applicable for actually how governments and cities can actually manage their disaster risks and reduce their disaster risks. And that is something which I feel, as we are thinking about the future, it's all that information, that capability is extending beyond insurance, and it means that the clients for insurance are going to become much better informed going forward about how to understand that risk itself.
My name is Martin Bertogg. I'm heading Cat Perils, as Dickie introduced myself within Swiss Re. Cat Perils is Nat Cat Perils eventually, so a bit more constrained compared to what Robert just mentioned. Our heritage in terms of time is also quite similar to what Robert mentioned. In the early 90s, kind of struck by the reinsurance industry struck by a few of kind of catastrophes, and not all of them as well foreseen. Kind of this interest in understanding the tail, in particular on the Nat Cat side, increased tremendously, and that's what this unit still does. Kind of R&D in the tail, particularly the tail, but more and more also kind of in the frequency scope. Flood was mentioned by Robert, and we do that on a proprietary basis. It's part of our task. The other is kind of putting that also into an infrastructure we provide for the whole company. And more, and that's kind of the new, kind of also looking forward, the new task of providing such expertise to the outside world. The outside world can be a primary insurance company. It can be people outside of the insurance industry. So communication and also kind of making risk transparency becomes much more an imminent task for us also within Swiss Re.
Thank you. That's fantastic. So I think later on today, the President of the United States is going to make a decision about whether or not the US is going to support the Paris Agreement. So climate change is obviously increasingly a topical issue. The question I've got is, to what extent does the insurance and reinsurance industry, is it equipped to be able to understand the impacts of climate change? What does that mean in terms of our analytical needs? What does that mean in terms of our product needs? I mean, this is a potentially huge topic. Ernst, what's some thoughts from this as an area of your specialism? What do you think?
Yeah, my experience is when it comes to this question on this risk of change, climate change, that our industry is not just one homogeneous body. I do realize that some companies, and that's rather the bigger ones, both on the primary and the reinsurance side, are dealing with this risk of change in a very professional way on a top executive level, whilst others are still in a wait-and-see position. But no matter whether we as an industry like it or not, what we also have to observe is that from outside, from a regulator's perspective or so, we are more and more forced to disclose data on our risks where we are exposed to climate change. I just would like to remind that it was not too long ago, a couple of months ago, when the Financial Stability Board of the G20 or so had this task force on financial disclosures, where first proposals have been made to disclose our risks as an industry in order to avoid disruptions like the ones we have seen in the banking industry. We believe this goes into the right direction. There are still a number of questions open, and what is really critical is that we as an industry, we should rather move a little bit closer together, that we don't see this split even widening, that the bigger ones or so can go a certain route because they have the capabilities, they have the resources, and the smaller ones are left behind. That wouldn't be a good development or so. So we need to have a joint reaction to this development, and join forces maybe even.
Robert, what about the quantitative element of this?
Well, I mean, the role of catastrophe modeling as itself helping influence the understanding of climate change, I think we should recognize. I mean, I've been a lead author of a couple of the IPCC reports, including the special report on extremes of 2011, because it was recognized that actually the expertise which exists, including in catastrophe modeling companies, can actually offer something to the understanding of this issue. In fact, that there are few sectors of the academic world that actually focus on questions like what is happening to the 1 in 100 or 1 in 200 risks associated with extremes. And I mean, now there is a terrific scientific literature which is emerging about, I mean, in the aftermath of every significant climate event. Climatologists will be running climate models with and without the increase in greenhouse gases back to 1950 to discover whether this particular extreme has become more or less likely as a result of climate change. So we have a lot of information now about specific floods. I mean, some specific floods there is no climate change signature, some there is, and that is really helping us understand how to advise our clients. I mean, one feature about climate and disasters, I mean, we haven't yet seen anything in the climate which couldn't have happened in the pre-existing regime. However, the probability of those events, the likelihood has shifted. So we know that the big heat waves in Europe and Russia, Europe in 2003 had quite a strong climate change signature. Some of the flooding in the UK had quite a strong climate change signature. The flooding in Thailand in 2011 did not. So we are getting smarter at being able to advise our clients how to stress test the events and the models which are which are most likely to have a climate change link.
I mean, that if I can just sort of ask you a sort of follow-up question on that one. So that sounds fantastic. That sounds great. But practically speaking, it's quite hard, right? It's quite hard, but potentially because is the science advanced enough to be able to do this in a robust way? Are the tools that you and others produce sufficiently flexible to be able to do this very easily? What about the uncertainty? Do we think that people are comfortable with a level of uncertainty that probably almost certainly is there today? I mean, sounds nice, harder to do?
Yeah, it's extremely hard to do because, as you say, if once we leave behind what we consider was it's hard to ever use the term as stable, but a pre-existing climate regime, and we know it's changing, then we know the concept of using a baseline to determine return periods no longer works so efficiently. So it's extremely challenging. The uncertainty clearly grows higher, I think it may well come down to issues of dealing with a regulator. I mean, this question of looking at a 1 in 200 year loss and being able to robustly state the degree to which that insurer or reinsurer has applied some appropriate stress test to the results they're getting. It definitely doesn't make life easier. But I think the tools that are available provide the initial foundation for actually allowing insurers and reinsurers to stress test what they are experiencing.
But if I may interfere here, it's not just about the uncertainty. This is where we currently focus on those who are engaged in catastrophe modeling or so. I think over the next years or so, and don't talk about the next 20 years or so, we need to think about the methodologies. Currently, when we look at catastrophe models and climate change, what is usually done is you look at the event set and change frequency and or intensity of the events, the windstorm events, the flooding events or so. And I'm not sure whether this is the final answer, because if you think about events which never happened, this is what you said, Robert, or so, they wouldn't appear in our catastrophe models. So we think, I believe we also need to focus more and more in the future, but in the next future or so, on methodological issues to improve the way we model catastrophe for our industry in general.
And I'd like to add an additional thought. Now we speak about climate change, making our CAT modeling a transient kind of thing, something which is not static, and I think that's a learning we take more and more. We're now taken probably 20 years to build kind of a stable state of what's CAT risk and how does it look like, and now we start to realize actually it's something which is not stable, climate change being one. Thinking of some of the studies we've done recently or in the recent years, there's also kind of the change on the human environment, urbanization kind of to think of foremost, kind of coastal inhabitancy increasing tremendously, being a factor often as significant as the factors we might kind of infer from climate change. So there's quite a few factors moving with time, and we have to monitor all and also kind of realize that the picture we have right now when it comes to communication in 5 or probably 10 years looks quite different. And the urbanization effect might sometimes be even the stronger one than even the climate signal. But just adding to the uncertainty
Absolutely.
bill. So
Socio-economic factors, for instance, are the most significant drivers of change. Yeah.
Yeah, I mean, we have a luxury in the insurance and reinsurance sector that the risk horizon is very short term. So you know, we are not getting questions beyond the duration of an insurance-linked security, which might be 3 or 5 years into the future. And we know that other sectors of the economy are asking questions about disasters and extremes 50 years out. And that's a far more difficult question. But actually, you know, we were involved in a study called Risky Business, which you can find under riskybusiness.org, which was funded by a number of US billionaires with a social conscience who are interested to know what are the economic impacts in the US from climate change through to the end of the 21st century, and to do that for hurricane, wind and storm surge, they wanted us to use the same catastrophe models which are employed in the insurance sector, but actually run with as much as possible future perspective on sea level and changes in hurricane activity. And one of the most interesting features of doing this exercise was just watching the uncertainty broaden and broaden as you go into the future and get almost, you could say, impossibly wide. I mean, by the end of the century, and so clearly we are faced with our own perspective on uncertainty today, but it becomes much more challenging as you look further out.
Martin, can you just, on the same topic, because I think it's important, so I want to stay with it a little bit, what about sort of products? So we've got the right products that can deal with climate change? Should we be thinking about that a bit more?
It's a good question you bring up, thinking now of a very concrete kind of topic in the insurance, reinsurance environment is kind of the topic about the right product. Event cat excels, which is still the standard product on how most of the cat risk is being reinsured, also kind of been used in the regulatory framework as an important kind of argument, kind of to reduce capital needs. Is this still the right product? And thinking of a few event series, particularly in the UK, not too many years ago, 2015, kind of identifying a single event, the way the industry right now thinks, becomes sometimes very tricky, how there is no real beginning to kind of a flooding, windstorm, atmospheric time of event. There is not a real end to it. And there are needs in the industry, which are right now, I have to admit, I think not completely and well answered. There are some notions on how to deal with it. Is it more kind of looking at an aggregate picture, more at the holistic picture? And that's where we then sometimes also get to the model limitations we have right now, kind of the way risk assessment is being done in the industry, there may be awareness that the way we are doing it might not be completely in sync with these products we might need down the road. And I see there is more pressure and need also to be innovative on that side.
Okay. Though I think when we saw this morning somebody that's sort of doing that actually sort of works quite well with the insurance industry. So I think, as long as we can stay in touch with those things, that probably should be okay.
Yeah, it's not just the climate. I mean, clearly we've seen this succession of flooding events, one on top of the other. And we find these back in history as well. They clearly are very challenging, but you only have to think about the New Zealand earthquakes of 2010 and 2011, and this whole question as to, well, what is an aftershock, and the difficulty of packaging that up in a particular excess of loss contract. It clearly invites, I think, the exploration of maybe alternative designs of risk transfer to handle that kind of situation.
Dickie, back to your initial question about do we have the right products? I think it's first of all a question for the primary insurers, but then it's of course also a question, an issue for the reinsurance industry, that they don't necessarily have exactly the same issues, but one thing which we have in common is we have to, and I'm absolutely convinced with this, we have to move much closer to our clients, being more client-centric or client-focused, whatever you would like to call it or so. Because if I ask myself, how often have we, and I'm generalizing a little bit within Munich Re, have asked our clients, which needs do you have? And my experience going back for many years is that we rather, as a reinsurance industry, said, well, this is our idea which we have. This could be a suitable product for our clients. Let's roll it out. And then sometimes we were wondering or so, why was there no demand or so? So we need to talk much more with our clients. That is the same with the reinsurance industry, with primary insurers. And as we as reinsurer more and more are operative also on the primary side, on the retail side or so, we need to talk also directly more. And that certainly is with primary insurance companies or so. And with flood insurance, we have seen some movements in recent times or so. For instance, in Germany, we have the Zurich system, which is the flooding zoning scheme or so, where primary insurance companies for years were arguing we cannot provide with an insurance product for this highest exposure zone, the zone 4 in this Zurich. Today, some primary insurers do provide solutions also. So there has been more interaction with clients and asking, do we have the right products? So we move on, but I believe still a little bit too slow.
Okay. I think I'm going to change slightly. We've got a couple of questions coming in. There's one I'm going to hold off for a little bit because it's going to fit in with a next question we've got coming up in a minute. But we've got a question here, so we'll deal with your question. Let me just give you one of these.
I think that things that have to do with changes in the perception and evaluation of weather is very important, and the climate change is clearly one of these. And I think that rightly so, the discussion has been centered on that. At the same time, I think that there are other areas that are very important and are crucial. For example, in Italy, we are experiencing new problems in evaluating and assessing earthquakes. In particular, what have happened in the recent years is that a new feature of earthquake seems to be surfacing. In particular, the fact that probably seismic fault lines could be affected by contagious, and therefore there is a new dynamics that builds into an earthquake, and that is probably going to change even the way in which reinsurance company are going to see this product and the protection they provide in this kind of cases. And this is something that is not even in something that can be detected in 1 in 200 years kind of time horizon, but is going much farther. I would like to know what kind of new development are on these specific issues.
Did you get the question clear enough?
Sure, I can start. So I mean, it very much follows on from this discussion about a sequence of events, a sequence of floods, a sequence of earthquakes, as in New Zealand and clearly as in Italy last year. I mean, there is in fact nothing new about having such sequences of earthquakes. In Italy, there was a very famous sequence in Calabria in 1783, which where one after another a whole series of faults went off in what's called a cascade of earthquakes. And so it is not new, but it is very challenging. It's very challenging to the people living there. I mean, if we focus on them and the disruption. I mean, obviously the first earthquake at Amatrice killed 300 people, but then the succession of earthquakes paralyzed the whole of that region for several months. And then there's the question of insurance recoveries. And clearly, I mean, the feature about Italy uniquely is that homeowners do not buy earthquake insurance, and or scarcely buy it, I should say, and actually and believe that the government is going to provide compensation. I mean, you're shaking your head, so I'm happy to hear more. But definitely we should make having a product which can cover the whole of that sequence would be very sensible.
The thing is that what I see in the market seems not to be very satisfactory. That is, of course there are all side problems like political coverage and government involvement, but from a technical point of view, it doesn't seem that even though this effect is known, but in terms of practical modeling and implementation into the current major vendors of this kind of product, this doesn't seem to be there, or doesn't seem to be effective enough.
Can I expand on this a little bit, actually, because I think there's I think there's an issue that if you have sort of the insurance and reinsurance community's solution provision coming from two companies, they can be fantastic at what they do, but inevitably you've got a very limited choice and a very limited source. So actually one of my questions that we sort of talked about a bit before was, the engine of innovation for the world really is academia, the science base. And do we have enough, so my question for you gentlemen is, do we have enough access to that science base? Is it readily available? Do they understand the questions that we ask, like this one specifically? Can we get more choice in how we get answers to these questions? And what is the friction that stops the science base interacting more with us? Or maybe it's not a problem. I think it is, actually. But anyway, who wants to? Martin.
I think I would start with arguing with you if it's really important. You asked the question.
Good, yep.
Sure, there is some value, and kind of I'm not denying that, but thinking of the focus also mentioned in the beginning of kind of where I see us pushing more is we have CAT models and they have their limitations, there's uncertainty, but we've reached quite a good flying height, I believe, to answer the key questions reasonably well. The industry has become very efficient, I think everyone's aware of, also kind of resulting in the respective cost pressure. There's a commoditization, particularly between insurers and reinsurers. The knowledge right now we pull out of these CAT models stays sometimes in a very closed corner with a limited scope of people really understanding and dealing with it. It's within the professional insurance world, where I think it's now very well established to talk about it, understand the key figures. But going beyond that, the value of the model, the decisions you can take based on models, as good as they are right now, it's not very well known in terms of also creating risk awareness. So for me, it's more about the question, how do we get more outreach rather than building even more input in something which has somewhere a stop barrier and it doesn't get further. And we've not even started to speak about what we would call this protection gap. How can we kind of make risk more tangible, more an intuitive message to the person on the street?
Hold the protection gap for a second.
I would like to challenge you, because I don't believe the academic community, I think it's an illusion to believe they have superior knowledge on many of these problems, because these are application-focused questions. They're not pure science questions, they're application-focused. And until you understand what the needs are of the insurance industry in asking the questions, it's very hard to formulate a response, a science-based response, which is effectively going to attempt to answer them. And I mean, if you're an academic, you have your own agenda. You don't have the agenda of the insurance industry. You have your personal agenda of how to advance your career as an academic. I've been an academic. We employ dozens of postdocs from academia and then get them to focus on these applied science questions, because these are not the questions which are asked in academia.
But that's fine. But you end up by producing one view of risk, right?
Well,
there's the RMS view of risk for whatever peril we're talking about.
There shouldn't be one view of risk, clearly. There should be more of the uncertainty displayed. This question of Italy is a very challenging question about cascade earthquakes. They're not effectively represented in CAT models right now. I would agree, but it's the application of we know the science on it, but it's how you apply that in the context of reinsurance contracts, for example. It's that interface where we need to do more work.
Well, look, first of all, I didn't say better necessarily. I said alternative, right? It could be better, it could be worse, but I think alternative is valuable. I mean, I know two companies that have a view of Italian earthquake that supplements the view that you and AIR have, right? And is that bad? I don't think it's bad at all. It cannot be seen as bad other than possibly to your shareholders, right? And I accept you have a perfectly acceptable need to satisfy your shareholders. I don't, nor does this gentleman here. Well, he does, but it's a different set of shareholders. And the point, I think, is that the translation of that information is blocked because of the lack of knowledge in many cases by the science community about what the hell an excess of loss contract is, or a stop loss, or anything else, right? Which is why we started Oasis, to try and even up the playing field so that actually that knowledge isn't required by academics. And we're involved with the Potsdam Institute, who are building a climate change model for the Danube Basin that incorporates under their published papers, right, so it's their view, their opinion, what climate change is going to do on the Danube Basin. And I think that actually established firms, and this could include all of you on this panel, may not want to stick your neck out too much and talking about the increased risk, because frankly, it can be dangerous to do that, whereas the Potsdam Institute with a published paper can make statements that you can't or I can't. And I think that's valuable, so I didn't want to take up too much time, but I think it's important to just get that sort of point. That I think, anyway, Ernst, enough from me. What about the science-based consideration?
I think those who are interested in having access to science and those who have in-house resources to do this, they have this access. So there's not a lack of access, but you need in-house resources, and you need to have people, you need to have specialists who can translate. Just as you said, you can translate scientific language into language of our industry, and if even more so, and that brings me to the gentleman's Italian issue. So we need to translate our know-how, combined or starting with scientific know-how, combining with insurance know-how, into information which is of value to our clients. I like this morning this one sentence when one of the panelists said, the core of our business activities is providing peace of mind. And we as an industry, when it comes to natural disasters and catastrophes, we do have this information by joining up with scientific organizations, but we have a lack of providing this information and making it accessible to the broader people society. And I think this is a role which we need to strengthen very much so. It also would contribute to our reputation. So we do have the knowledge. This is by far not perfect. We have to learn more and more over time or so. But translating this information and providing transparency in Italy, for instance, about the earthquake hazard. I would agree when it comes to these technical details, scientific details about certain patterns or so. That's then really more for the specialists. But providing information to the broader public that there is an earthquake hazard, depending on the region, and it is a real one, and you can do something by looking at the vulnerability of your home and maybe transferring some risk to the insurance industry or so. That would strengthen our role in society as an industry or so. And last sentence, maybe more of a question. My perception in Italy when it comes to earthquake is not that there's a lack of products provided by our industry. There is rather a lack of demand coming from private sector and commercial sector. Maybe I'm wrong or so, but I can't see, and that does not apply to Italy only, I can't see really a huge kind of lack of supply. We might not have the right products. We need to improve, but in general, we rather have a demand issue than a supply issue.
Okay.
That refers to the gap Martin was mentioning.
I want to move on to a different topic, because actually time is moving on, and we've got a couple of questions on this topic. So the topic is really around the protection gap, where there's this insurance coverage of X and population of Y. It's obviously a developing country issue because of a whole host of different reasons. But of course, we shouldn't forget it's also a developed country issue, with California probably being the best example, with only approximately 10% of homeowners buying earthquake coverage. So that's the sort of subject, and I've got two specific questions. One for Robert on this, which is, many consumers in the European Union are not sufficiently insured. How can reinsurers help? How can they stipulate public-private partnerships? What about parametric insurance? Well, actually, I think that's probably a question for all of you, really. And there's another one, which is specifically for Martin, which is, taking into account your experience, please share with us which are the most effective, this is a difficult question for you, most effective earthquake nat cat insurance pools and the business model with the highest penetration rate, layer, or retention? Do you feel you could answer that question?
Well, I give it a try. It's quite a detailed question. Just thinking of the pools which spring to my mind. It's New Zealand probably kind of for and foremost, kind of also being proven in the last 5 years quite intensively. Close to 90 or even more % of penetration, and offering a reasonable amount of cover on a kind of basic cover level, working very well. Interesting, I think, to note that before that event, at least the way I got information, it was sometimes difficult to uphold it up to 2011. There was political pressure, there was quite some money amassed within this pool. Is this reasonable to have there? So political pressure to take that away and dissolve the pool until it happened and the awareness got up, and I think people started to realize the value of what they have there. Nowadays, kind of very tricky to introduce something like that. This pool has been inspired, and I'm just expanding a bit there, by the post-war feel of kind of we need more solidarity. It also has a component of protecting against war damages. And that's similar to some European pools here. Thinking of Switzerland has quite some age, that pool here, which doesn't cover earthquake, but any other natural perils. Nowadays, probably very difficult to introduce. Kind of, it had that level of solidarity around post the World War II. Well, it's now bit deviating from the question, so I stop now. But New Zealand kind of being my foremost best example.
I mean, I think this question about trying to close the protection gap in the rich countries, I mean, clearly there's a protection gap in the poor countries, but in rich countries, I mean, I think to reflect the discussion which was being held in this room this morning, we should be thinking about the future and actually what it's going to look like. And one key feature was being discussed this morning earlier is people are going to become much better informed around risk, I believe, and at present you may have to tell someone these are the risks you face around earthquake or flood. In the future, this information is going to be available to people. They're going to be able to access it. They will, as you walk along a street, your smartphone will tell you you're now in the flood zone. You'll be able to stand outside a building and find out the details of it. It's going to be accessible, this information. I mean, we know how to generate it. It's a matter of distributing it. It's the people of Amatrice in the future are going to know that they are living in a dangerous earthquake zone, that they need to have a key investment on taking action to reduce the impact of earthquakes. I think that knowledge, as it gets out there, it has the potential to change buying habits around insurance products, if those products are really designed to offer effective protections. I mean, I think the discussion this morning was more about the life and health side. I think very much the same principles apply in thinking about property and catastrophe insurance.
Ernst, thoughts?
Yeah, I think to close the insurance gap, so we need to start closing the information and transparency gap. People need to know that they are exposed to a certain degree, depending on the peril. I think this is still a major task ahead of us, and I think we as an industry can play a role. Just as I said, this is this peace of mind element or so. But it's a bit of a different story when you go to emerging and developing countries. You don't have to start with providing more information to people who live on $10 a day. Here, our industry needs to target more governments and talk to the sovereign level. And by the end of the day, starting with public-private partnerships, I'm not too optimistic that we will see in the near term a closing of this gap. So we need, again, to kind of join forces at the political level, where developing banks, for instance, and governmental officials team up with the private sector and develop solutions at a sovereign level. I think that can help also. And finally, this could arrive at pools, and we do have concrete success stories in developing and emerging countries when it comes to closing this gap. It's still just a small fraction or so where we have succeeded or so, but we do have success stories. And last sentence also, just what Martin said also, Earthquake Commission, the earthquake pool in New Zealand is the best pool solution. It's a public-private partnership. activity. So both the public sector and the private sector play a role, and jointly they have arrived at the best NatCat pool solution worldwide, earthquake and war.
And I think it's worth saying that the organizations that we all work for are involved with conversations under the umbrella of the Insurance Development Forum, which is specifically looking at this question. So all of the world's insurance industry has got together to say, we need to find a solution for this. And there's a whole load of activities that are going on, as you said, both at a government level with the World Bank, but also at sort of one level down, because actually I think there is a recognition that collaboration between us all and different actors and different players in this space is the only way that we're going to have a chance of fixing some of these big problems. And I think there's a really interesting theme, which we're not going to have probably enough time today to talk about, is where further collaboration needs to take place. And the organization I run is another example of that. I'm going to get on to what is
still built on one of the points Ernst
quickly
was mentioning.
Yes.
That's this peace of mind aspect, and you mentioned information. We need to be better in informing, kind of creating empowered people, knowing about their risks. Peace of mind also contains this emotional aspect to it, and that's maybe something which we as insurance industry with the primary products we're selling right now, not quite sure if we achieved that already. In earlier panel discussions here, it was mentioned, well, the insurance industry still has this reputation, we're not paying claims. And kind of starting from that proposition, peace of mind, we're seemingly not being the best ones to always provide that. That may be also the topic for Italy you mentioned before, that while the demand is not there, there's somebody else providing better peace of mind at this point in time than we do. So we also still have to learn there, and kind of empowerment of the individual to know his risk situation, but also providing the certainty that the product he can buy, so maybe also more bespoke products where he or she has an influence on how this product looks like. That's an opportunity I see down the road to come up more, rather than pushing standardized primary policies into a market which don't really provide that peace of mind.
Really good point. Last question, almost certainly, I think, is going to be on one. There's some questions coming in on this, but I mentioned it in my introduction. The question really is around, and it sort of relates to this a little bit, but it's what information do we need to have we got to be able to understand the enough information to make judgments about risk selection and pricing and the suitability of the products that we use or are licensing. So, where are we on that spectrum? Is it all fine? Is it not fine? And there's a specific question for Robert about how does your firm sort of be able to provide some certainty along those lines? So let's come to Robert last on that. Ernst, what about you? Have we got the levels of transparency into these products and to the uncertainty inherent within this problem?
The short answer is no. And this is a discussion which we're having in our industry since 20, 30 years, since I can think back. Improvement of data, both on the hazard side, but even more so on the exposure side, so exposure information from our clients or so. We have seen some progress, and the ongoing digitization of CAT models or our industry also helps. We are more and better prepared to have this data at hand, but I think we are a long way away from being perfect. And I would expect that, especially when it comes to catastrophe models and how they are built and set up or so, on the exposure side, we're going to see the biggest changes over the next years. And my kind of personal view on this is that the database structures, even which we have currently also, will change. We will see through digital processes like artificial learning processes. We will see open databases, non-structured databases, where we have access to information where our client doesn't have to tell us this is a building with features A, B, C. We simply know it, and we can translate it into more than just a simple vulnerability function or so. So we're going to see significant changes. This is my expectation on the data side, and we're long ways away from having a good situation there.
a different view, Martin, or not?
Yeah, quite a different view. Not kind of arguing with this being coming to happen, but looking at the kind of a limited pool of resource typically available across the industry for every company, where to invest it. And this morning in particular, we're talking a lot about the disruption more on the distribution side. And also now we've been discussing more about kind of how do we communicate our risk management, risk message to a broader community to eventually sell more of our product, to sell it more appropriately, kind of that it really creates that peace of mind. So if I would have to invest my pool of resources, we do that to some extent, it's more on that latter scope. Say that on the model side, maybe we are 80% there, maybe we are 70% there. Clearly not perfect, fully agree, but where do we invest kind of the limited resources? It's more on kind of now using what we have available, which is not in the 20% stage, to make more impact for a broader amount of people and communities.
I do agree with you here as well. Or so, if we need to talk about resources, or so, the focus rather should be on the front end or so. And we should not, and I think, so don't get me wrong with what I just have said about improvement with data or so. Lack of data or lack of quality of data should not be used as an excuse in our industry that we cannot provide certain products or so. We have been innovative enough, if you think about parametric solutions, where we have moved away from exposure information, where we just use, say, scientific meteorological data or earthquake information or so. So lack of data is currently not an excuse not to provide the services our client needs. But so this is the kind of the front end approach, but the back end approach is what I just said on the quality of data.
So Robert, you're not necessarily providing enough information, I think.
Well, I mean,
part of the conclusion.
Catastrophe modeling is, I always say, it's work in progress. It'll never be completed. We'll you know, especially when it comes to questions like what is the 1 in 200 year loss. Clearly, we are going to be much more uncertain about that than we are about the high frequency losses. It is never going to be a point where we've finished, solved the problem and can go home and you can just get on with it. It is always, you know, we're up against the uncertainty of our knowledge. I mean, our knowledge uncertainty, our science uncertainty.
Can I just stop you a second? Because actually, I don't think that's necessarily part of the question. Part of the question is, for example, do firms like yours give the 10 key assumptions in the model and the sensitivity around those assumptions? Is that information you routinely give? If not, there may be a good reason for it.
Well, anybody who's using models, they need to be transparent to whoever is using them so they can themselves. I mean, the system, the regulatory system whereby it's not us who have to defend the models in front of the regulator, it's whoever is using them, is a really important question that the understanding of modeled risk, it needs to be absorbed by that organization so they themselves have taken their own approach to it. If it's Swiss Re or Munich Re who also, you know, who are using models as well, they need to own the responsibility for the decisions they take based on model output. The model itself needs to have suitable transparency. I mean, I sort of feel that in this session I was hoping we were going to talk more about the future, actually, in terms of future products. I mean, as I said to start with, the area which I think is most interesting is actually the democratization of this knowledge, that it is passing down to the consumer, and in particular, the risk transfer. We're very focused, obviously, on insurance. The insurance product transfers risk. It doesn't reduce risk on its own. It's actually, and how you harness the insurance product to mechanisms to reduce risk, that will bring real societal value. Simply providing more insurance. I mean, we can say it reduces the protection gap. The most effective way of reducing the protection gap is to reduce the level of risk, actually, and that reduction can be achieved by building better flood defenses, having a better building code. It's the alliance of, I think, the insurance mechanism on catastrophe with the public sector response. I think that's the future.
I think that was a nice answer to the question, or I'm not quite sure. And we've run out of time, I'm afraid, and I wouldn't want to keep everybody from lunch. There is one question that I'm just going to very briefly answer that we haven't got, which is around if governments release information on, say, flood risk in the marketplace, is there a possible sort of legal issue, which was to me for some reason or other, but which I do know a little bit about this. But I think the short answer is no, there shouldn't be, and there are ways of doing this. And in fact, there are ways of getting more information available, and I see it as being absolutely critical if we're going to talk about new products, we're going to talk about the ability to get insight into risk through our customer base, and we're going to talk about reducing the protection gap. The only way to do it is to make the information that forms the basis of those judgments on risk and buying insurance to be widely available. So we have to find more ways of doing that, and that's a challenge that is being worked on right now in a number of different ways. It's been a great session. I'd like you all to just thank the speakers who have faced some hard questions with some honest answers, and perhaps we can just thank them all for the time. Thank you very much.